So here we go, the most popular video series that I do on the channel, which is the Stocks I'm Buying May 2024 edition. So I have done this series for many years now on the YouTube channel, and it helps you guys just track what I'm doing in the stock market account, what I'm buying, what I'm selling, any moves that I've made, they're on this video here, so you can keep up with what I'm doing, and it's full transparency. Not like some other YouTubers out there that sometimes will sell something quietly in the background that isn't working out and hope you don't notice, and then maybe even rebuy into that stock. Or maybe sometimes they'll buy something and not tell you until it's worked out and then go, oh look, I'm an absolute genius, I bought here, and posted when they bought it. That doesn't happen here. On here, you'll be able to see if it works out, if it doesn't work out. So it keeps with that transparency, which sometimes goes against me, but hey, I'd rather be completely honest with you guys. So this is the stocks I'm buying. I'll do the UK one in a few days time as well. But these are all the stocks that I sold and I did buy between the 1st of April to the 1st of May. So I hope you enjoyed the video, guys. Let's get started. And as always, if you do want to know what I'm buying and selling in real time rather than the monthly update, the place to be is on the Patreon. If you join through the link in the description, you'll get the access to the live buy and sell alerts on there, a Discord with 500 members on to talk about stocks, including me, and 2 exclusive videos a week. So you can go watch this video on DraftKings, where I do a full breakdown on DraftKings earnings, which is my largest holding, which I did on the Patreon yesterday. And as well as that, if you want some free shares, join through the link in the description. That will give you access to Trader 212, the broker that I use, and we'll give you a free share worth up to £100. Well, let's get on to the first stock. So the first stock I bought, the 6 stocks that I bought and 1 stock I sold. The first stock I bought was Mercado Libre. So Mercado Libre had a pretty difficult last couple of months. The stock, after its earnings report, had a bit of a drop off its earnings report, and it just went lower, lower and lower, and eventually the stock actually ended up being down 21%, which is actually recognised as a crash. So the stock actually had a crash through the month of April into May, and I just went, you know what, I've always wanted Mercado Libre to be in even bigger position than where it is right now. I've been wanting this, I'll go buy some shares. My only thing is that I actually wish I probably bought more. I would actually like Mercado Libre to maybe be a top 3 holding. It's a top 5 holding. I'd maybe like to increase it a little bit more. I didn't, but I did buy some shares, and actually since then the stock has rallied up now 20% since that time frame. Now Mercado Libre is a e-commerce play, as well as that it's the fintech play in Latin America as well. So you kind of get in the Amazon of Latin America, and then also you get in the PayPal of Latin America here, which obviously, as we know, e-commerce is okay, but the big thing with the fintech platform is it's a lot better, you know, a lot more profitability, a lot more higher margin as well. And like I said, the last earnings were good in my opinion. If you look at the earnings, they were good, 42% year-over-year growth, good beat. There was a miss on the EPS, but that was to a one-time charge. If you took the one-time charge out, there was actually a really healthy beat on the EPS. It seemed like investors just didn't do the research and just did not want to do the maths, and maybe they're relying on computers to scan the earnings rather than actually digging in themselves. I guess this sometimes where it helps that if you do the manual work, you can sometimes beat some of the robotic work. And I just went, I don't know how people are not look at these last earnings and thinking it's impressive and selling it off these earnings. And people just seem to panic, you know, sold the stock down. I thought, you know what, this gives me a chance to buy some more shares. Bought the shares. We come out with earnings last week. Earnings were absolutely fantastic once again. They didn't have the one-time charge this time, so the EPS was a beat. It wasn't even a small beat. It beat by 0.83, so that was nearly over a 10% EPS beat, which is crazy. Revenue of 35%, and once again a really good beat on the revenue as well. And it's trading at 50 times forward earnings. I know a few people would say this is expensive. In my opinion, this isn't expensive. When you're getting one of the giant leaders in Latin America through e-commerce and payments, you're growing 35% a year, you're going to trade at a premium. And I think the premium for 50 times forward earnings is very low for here. I think within a year or two, this company is very much going to grow into that valuation. And if they keep up the longer term growth of 30+%, this is going to look very cheap in 5 years' time buying at these levels, in my opinion. And these economies, these e-commerce economies that have just really started operating, have so much, you know, drivers for growth. We've seen how much growth there's still been in mature markets like the US and UK, and how long they were growing at high rates for when we started to see them come into operation. The same just happened in Latin America, but in Latin America there's so many countries for them to go for. I mean, if you look at the size of the fastest growing e-commerce markets in 2023, I mean, you've got Argentina that's growing rapid, you've got Mexico in there, you've got Peru in there. There's so many Latin America countries that are in the fastest growing e-commerce markets out there. I mean, Mexico isn't even mentioned here, which I'm Brazil isn't even Mexico is mentioned, and Brazil's not even mentioned here, which I'm surprised. That that must just be out of it here. But yeah, there's so many good markets for them. So I really like the e-commerce and fintech play into Latin America. Number 2 was PDD Holdings. So I have been buying PDD Holdings up at the moment. It was having a bit of a dip through the month of March once again, or May should I say. It did dip in March. We got the months muddled up. It did have a dip in March, and it also had another dip in May or April, should I say. April when I did buy some shares, and you can see here it was down massive. Since then, there's been a bit of love towards Chinese stocks, so it has had a bit of a bump up once again on the share price. But the reason why I'm buying PDD Holdings is because of Temu. Temu has launched. It's a e-commerce site that is taking the world by storm, and it offers very cheap products. And what do we know at the moment? If you listen to any conference call, any kind of middle class conference call like Nike or Starbucks, they all go, people aren't spending as much money with us. And the reason why is because the budgets are getting squeezed, and they're looking at someone like Temu and going, you know what, I can go get a lot cheaper products from Temu. That's what I'm going to do. And Temu have really benefited from that, as well as absolutely massive launches around the world. I mean, this wasn't even a company 1 year ago, and now they've launched into the UK, into Europe, Spain, Netherlands, Germany, launched into Latin America, launching into South Africa, just gone and taken the world by storm. And if you go look at the top app in the app charts, once again, Temu holds the number 1 spot. And if you were to go around the world, it pretty much holds basically all the spots around the world at number 1 in the App Store at the moment. That's very, very impressive from Temu, and I think it will only continue at the moment with the pressure that's on people spending at the moment. And if you look at the growth is absolutely insane. Good amounts of profitability thrown off, and as well as that, it's sitting on an absolutely cracking balance sheet. I mean, look at the balance sheet here. And right now, I think the company is trading at 16 times forward earnings. And just to show you the growth numbers that they're doing at the moment, so this year we're expecting the EPS to go from 0.43 up to 8.78, and then in 2025, 8.78 up to $11.70. From a revenue point of view, they're expected to grow 52% this year. I think that's going to get massive hiked up, because look at this quarter's figures. 134% growth and 109% growth. I mean, if you're telling me that this company is going to decelerate to 52% in the last 2 quarters, you're absolutely crazy. I mean, they would have to decelerate massive to go down to them sort of numbers. I don't think that's going to happen. And even next year, 29% growth. I mean, you should not, even if you call this a Chinese company and put this at a lower metric, you should not have a company doing these numbers, trading at 16 times forward earnings, in my opinion. So yeah, I'm liking Temu at the moment, especially when it sits number 1 in most of the app charts around the world at the moment. So yeah, I like Temu at the moment. Next one is Starbucks. I have started buying into Starbucks. I think that everybody will be drinking coffee in 5 years. And even if Starbucks doesn't take market share and holds market share, which I think it will take market share because it has so much expansion plans, new stores opening up, it has obviously new countries to enter, it's still got major amounts of expansion to go. And people are still going to be drinking coffee in 5 years. And I think that most of that coffee will be drunk at Starbucks. Even if they don't take share, I think they'll maintain share. And I think Starbucks is a long-term hold for the next 5 years. It will bring in easy, good 50 to 100% returning while paying a dividend. And there's a lot of fear out there at the moment. There's a lot of fear out there. It's a typical one where everyone goes, you know what, I'd love to buy Starbucks at $70. And then it gets to $7 and everyone goes, oh, actually, I think I'd like to own it at $50 now. And it makes me laugh because whenever the fear does come around a company like Starbucks, you know, everybody says they'll own it, and then the fear comes and they go, you know what, I actually don't want to buy it until $50. And it's like, you're only buying it at $50 because they brought a little bit, the earnings report they recently bought out. So I started a position before earnings, and I was like, you know what, the valuation does look cheap, but I want it cheaper. And I did get the cheaper valuation, and now I'm like, right, here we go. This is where I start buying a lot of Starbucks now. And yeah, the earnings report was weak, but I mean, they've done a big downgrade here already. So there's already a lot of negativity priced in there. And it's basically holding level from where it was. There's basically no growth there, which we expect Starbucks to grow. Now, obviously, with Starbucks, you know, you look at the environment out there, what Starbucks is saying is like people aren't spending, the regular customers aren't coming in at the moment. And why is that happening? Well, you listen to any kind of big company that has big middle class spend. You know, middle class spend at the moment is tightening. You've seen it with so many earnings reports. If you read any earnings reports in the last 2 weeks, they will tell you that basically that middle class customer is pulling back its spending. And if it's only 5% that's pulled back, that's enough to do this to a company like Starbucks. And you go listen to anyone like Tesla. No one, the middle class aren't going out and buying cars. You go listen to Nike. The middle class aren't going out and buying as many trainers. You go out and listen to, there's so many conference calls out there. They're just not going out and spending at the moment. And obviously that's affecting Starbucks. Now, I think this is just a short-term impact while these interest rates are very high, the consumer spending is tightening, and I think it will loosen up. And I think when you look at Starbucks, you're looking at a company that has historically grown quite well with its new store expansions and done pretty consistent profit growth. I don't think this is going anywhere over the next 5 years. I think that if you feel like Starbucks is going to be bankrupt in the next 5 years, or they're going to have to close 1,000 stores, then, you know, I'd say you're totally wrong. In the next 5 years, I don't think that'll happen. I think you'll be wrong, but I think that is one that everybody says they'll own on a dip, and now we've got the dip and nobody wants to own it, which is absolutely crazy to me. So yeah, I'm liking Starbucks on the current dip as well. Next one's dLocal. So I did buy some shares in dLocal. This is a bit similar to Mercado Libra, that basically e-commerce is booming. dLocal is a company that handles a lot of payments for big companies. So if you look at the list of clients down here, so they've got Wish, TripAdvisor, Dropbox, Nike, for example, Booking.com, a lot of big, Amazon, Google. So many big companies use them as their payment provider in emerging markets like Africa, Asia, Latin America. And basically what happens is the payments come through dLocal. dLocal handle the payments for them. They see for the likes of fraud, for example. And then what happens is the payments come in from the local currency. They convert it across to like Microsoft, for example, one of the clients. And then Microsoft can easily go handle that in the reporting side of it. So they take all the risk of the conversion of the currency, which does happen quite a fair bit in these sort of countries. If you look at the Argentine currency at the moment, they handle all that risk for them, they handle all the fraud for them. So I'd say dLocal has a pretty good moat with that situation. And as e-commerce grows more and more, obviously the payments that are coming through dLocal and these fast and growing e-commerce companies are growing more and more, and this is allowing dLocal to grow at very good rates. If you look at their current quarter, you know, it's nearly 40% growth, and that's with FX impacts on top. Overall, another year of 40+% growth this year. Next year, 32% growth, and also it leads the company to do very good numbers on the profitability, because as we know, fintech, very high profit margins, and you can see here they throw a lot of profitability. The profitability is getting hit a little bit at the moment because of FX impacts, which can happen, which is some of the little risks that does happen with here. Now that does mean they do take a very high cut rates normally, so that will reward them as stability returns to the currency impact at the moment. But even so, the profitability that is thrown off is absolutely amazing. It leads them to have a very good balance sheet, as you can see here, no debt on the balance sheet. And if you look at the moment, since the IPO, the share price is actually lower than its IPO. It's down by nearly 50+%, and it's getting close to near its 52-week close, and you're picking this company up at 16 times forward earnings. Now, same again, I do not believe a company that's growing 40% a year, throwing off this amount of profitability with this balance sheet, this should, in my opinion, this should be a premium business. You know, it should be on the levels of Mercado Libra, and it's not. So I really like dLocal to the risk to reward here. The next one's Block. So I actually did buy some Block before earnings, which is very unlike me because I don't really like to buy before earnings, but I did. And I've got to say, I thought it was a genius move the other day. I thought it was a genius move because the stock rallied up massively before earnings, I should say after earnings. And I was like, oh yeah, look at that. I actually timed the market well for once. And then it went down after earnings. I went, how? How has it gone down after these earnings? Because they're absolutely amazing. I am recording this just after the market's opened up, to be fair, and it is having a bit of a rally after it's opened up today. But that was a bit frustrating because I thought I was you know, obviously I invest for the long term for the next 3, 4, 5, 10 years. But I did feel well that I might have timed that one really well, but not so much anyway. But I did buy 4 earnings because I thought the earnings that they were forecasting were really strong, and they were very strong. So I was happy. I'm still happy I bought, and I think the numbers that Block are doing are the best they've done for a long time at the moment. Obviously, they own Cash App. Cash App is a peer-to-peer site that people send money to, and also a bank as well that you can buy stocks on or Bitcoin on as well. And they also have the actual Square platform, which can be used as payments, but also can help businesses like the subscription side of it. So they subscribe to their services and they might do things like manage their accounts, manage the payroll as well, which is highly profitable because they don't have to put any money in here. More companies sign up and they get, this is the big driver of profitability as well. And if you actually look at the recent earnings that recently came out, which were very impressive, you can see here the transaction-based revenue did grow at good rates, which is a decent profitable part of the platform for them. But what I was talking about is the subscription and service-based revenue. Once again, the fastest growing part of the business. Really good growth again, as you can see here, and look at the profitability they throw off. So the cost of revenue for it is around about 259 million, and they make 1.6 billion on it. So they make about 1.4 billion of profitability on that platform, and it's the fastest growing, and it's the largest part of the platform, which is really, really good. As well as that, Square are really starting to manage the costs at the moment as well. So if you actually do look at the costs are hardly rising inside the business once again, which is good, and that's what led them to do good amounts of profit. They do have a bit of exposure to Bitcoin, as you can see here, which I'm not a big fan of Bitcoin, but this has always been called my Bitcoin play. So if Bitcoin was to do well, I would hope Square and Block do very well, and you can see here in the numbers that it is doing quite well for them. So that's my little exposure into Bitcoin as well, this business here. I just forgot I actually screenshotted it larger for you, so you didn't have to squint at the screen, but sorry about that, guys. But yeah, overall, the revenue is still growing good. Profitability is starting to ramp up really well. And yeah, I think on the forward earnings now, it's around about 24 times earnings, which isn't bad at all. Walgreens. So I am buying some more Walgreens. I'm buying this because the company this is a turnaround play. So basically, this business has been managed terribly in the last few years, and I feel like the company can now turn around and the financials do better, and then the share price comes back to its former glory. Now you'll be able to see here the stock really did peak in really 2016. Since then the stock is down around about 80%. It does pay a dividend yield, as you can see here. And Walgreens, as most of you guys know, are a retail pharmacy shop with a lot of locations around the world, including Boots that we have in the UK as well. And basically, if you look at the financials, you can see here since 2016 the growth has been a little bit sloppy. The profitability hasn't really increased. In fact, the profitability has decreased, and that's why the share price has been suffering. Now, hopefully, what will happen in the next few years is the company will start turning around. They have put a review in on how they can improve the business with cost cutting, managing the healthcare costs, trying to make the retail stores more profitable, and they brought in a new CEO. They brought the new CEO, which is Tim Wentworth, in the 3rd of October 2023. And yeah, it seems like he's got a clear plan on what he wants to do to turn the business around. I thought in the recent earnings, I thought they were okay. They beat on an EPS, they grew 10% a year, and look a lot better than CVS's numbers that came out as well, by the way. Reflectively now at 5 times forward earnings, and yeah, as long as they can keep ramping up the profitability, then obviously the one big thing they've had is the thought that the CV jabs would contribute a bit more, which it has somehow just disappeared off the world compared to where we were in 2020. So that's some big headwind that they have at the moment. But overall, yeah, if they can keep improving the business, I will buy some Walgreens as a bit of a turnaround, because I think the signs were there if you look at the recent report. And that leads us on to the last one, which is the selling. I did sell a stock. I sold it all out at this position, and the position I sold out was Lovesac. So I sold Lovesac out because they reported their earnings. I wasn't really impressed with their earnings. The stock dropped off on their earnings, and I did sell for around about a 10% profit, so nothing too major. I have owned the stock twice since 2023. I bought in 2023 and I sold for a good amount of profit. I think it was like 30% profit, and I sold this time for 10%. So overall, I've sold Lovesac now for 40+%, which I won't really brag about, but what I will say is that if it was a loss, I would hear it in the comment section for the next 4 years if it was a 40% loss. So I will say that. So yeah, I did sell out of my Lovesac position. The reason why was, like I said, the recent earnings. The only little frustrating thing is that since I have sold, there has been a bit of a recovery in the share price from that time frame, but I still would have sold from the last earnings. Basically, they are a retailer of furniture, and I still really like the business model. My thing is that I'm worried about how bad these earnings are going to get in the next 12 months, and I don't want to buy at these. When the stock dropped, I was like, I still don't want to buy, because I feel like this stock could fall to $16, $15, $14, and then I would buy. So I will buy Lovesac back in if it does drop to like $16, $15, $14, because I feel like that's a fair valuation for how bad the financials can get. Right now, I feel like the $23 doesn't reflect how bad the financials could get. And obviously, as a retailer of furniture, you know, house sales have been doing still okay in America, but they're getting slower. And like we talked about before, the spending in the US is getting tighter. And I feel like people buying houses, people going out and buying high finance products, people, the middle class that go out and buy a brand new sofa, which is expensive, I think could slow down rapidly. And I think that's why Lovesac have given their guidance, especially the closest quarter guidance, I thought was very poor. And the numbers themselves on the earnings were okay, but the guidance, so you got the 2025 guidance, or what would be our 2024 guidance? 2025 guidance here. But what was really weak, in my opinion, was the upcoming quarter. This is the one that they'll have most data on, and the fact they gave. So let me just show you the guidance for the next quarter. So last year we had a loss of 0.28. Okay, this year it's expected to go to 0.96. It's not that good at all, is it? And even in the next quarter, another loss, and a bigger loss than what we had. So for me to get up to this, where they are now expecting a $1.26, I don't know if they can do that. That would be a very big improvement in the second half. And the range that they gave as well. So look at net income. The net income was a range of 18 million to 27 million. That's a big range. So for me, they're really forecasting a big sales rebound in that second half. And I was like, that's a lot of guesswork if that rebound's going to happen when you look at these first couple of quarters, you know, start of the earnings. So I thought, you know what, for me to buy in with this risk here, I would like it a little bit lower, and I thought I'd sell out. I mean, it's, you know, obviously it's going to grow to 2% growth. We'll see if that happens. But you know, obviously they're forecasting a big rebound in 2026 numbers, as you can see here. And you know, if they do go to those numbers, you know, and they don't do as bad as what we're expecting, you know, this probably will do really well, and it'd probably be a mistake selling. But I just feel like I might be able to get this a little bit cheaper, and with the risk of the environment and the spending at the moment, I just felt, you know, I'm going to sell out here and see what happens. And also, you know, at the moment, you know, I'm paying up 19 times forward earnings. That's why I don't want to buy at these levels. You know, the reason why I want to buy at the, you know, $13, $14 mark is because I won't be buying at 19 times forward earnings. I'll be buying a lot more where I like to buy Lovesac, which is more towards, you know, the lower teen forward earnings. So yeah, I just thought, you know what, there's some risks here that I don't like, and I thought I'd just take profit off the table here and come back in a few months. So not that I don't like the company overall, I just feel like there could be a few speed bumps in the road that might lead to this stock dropping a good 30-40% from where it is right now, and that can quite easily happen when at Lovesac, because I mean, just look at the last, you know, couple of years. You know, it can easily have those 30-40% drops on the share price, and we'll see if one does come up, because they are expecting a very, very big recovery in that second half. And if it doesn't come, I think I'll get the $13-14 then, and I might buy back in there. So keeping an eye on it. I still like the company in the long term, but I just don't think it's worth what it's trading at the moment. And you know, you can like a stock, you can like a company, and you cannot like a stock price, and that's exactly it for me right now. I want to like the company, and I want to like the stock price to be buying. So yeah, I did sell that one out for a little bit of profit there. So anyway, those are the stocks I'm buying for the May 2024, and the stocks that I sold for May 2024. Hope you enjoyed the video. Let me know in the comment section what you are buying and what you're selling, and yeah, I'll see you probably tomorrow, where we talk about hims and hers earnings more than likely. Enjoy the video, guys. See you in a bit.